Please welcome the panel on attracting capital to promote growth, indicators and insights to guide foreign direct investments. Moderated by host of Money FM 89.3, Michelle Martin.
Okay, well, hello everybody, and thank you for being with us. This is going to be the most memorable panel at Milken. Definitely. And we're going to hear your thoughts and get your questions as well along the way. Let me introduce my fantastic panel. Really high level. Next to me is Pablo Cobalasi, who is president of Amex Cap, the Mexican Association of Private Capital. Next to him is Jackie Surtani, regional director with the Asian Development Bank. And to the far left is Paul Toppel, who is Indo-Pacific Trade Representative for Canada. A round of applause for our panel, please. Wonderful. Now, Asia accounts for nearly half of the global inflows of foreign direct investment. Singapore is the number 3 recipient of global foreign direct investment in the world. So in Singapore, 20% of our firms are foreign-owned, and they provide 60% of the highest paying jobs in Singapore. So can we question the low-cost model of FDI? It's a complex picture when we think about the deployment of foreign direct investment, right? Many moving parts. If we take a step back, the AI boom has led big tech companies to really double down on their investments in Asia Pacific. Green finance just taking off across the region, all against a backdrop of shifting supply chains and accelerating geopolitical tensions. So a lot to get through, but we're going to take the big picture approach with these gentlemen. And I want to start with Jackie. It's been about 2 years since China ended its COVID-0 policy. We know that global inflows to China have dropped considerably since 2022. Jackie, give us your sense of the landscape for foreign direct investment in Asia-Pacific today.
Yeah, thanks, Michelle. I mean, maybe contrary to a lot of other people, I've spent my entire career in Asia. I started my career actually in Hong Kong, and then ADB's headquarters is in Manila. So I spent 8 years in the Philippines before moving to this incredible city. And I think just in terms of the attractiveness of Asia, I think it's still, unless you're based here, and actually understand the pulse of Asia. And we were talking, Paul, about exactly where is Asia. There's no, Asia is not homogeneous, right? So you need to be out in Indonesia, you need to be out in Cambodia, you need to be out in the Philippines. The great thing about Singapore, I think one of the big strengths of Singapore is Changi Airport is one of the best airports in the world, so it's easy to get to anywhere. But, I mean, I think still, we haven't set the right parameters for the kind of investment that is really needed here in Asia. The first thing is you need to come out and to be based here, set up a regional headquarters here in Singapore, and really to understand the pulse of what's happening out here. And then see, get a lay of each of the countries, decide which country your particular company wants to invest in, because you can't sort of just follow the herd. We did a lot of, just as an example, we did a lot of renewable energy investments in Vietnam. Vietnam was hot a couple of years ago. Now suddenly there's more interest in the Philippines. And you got to just make sure you understand which of the countries are attractive for your particular company's criteria, and then decide where you want to invest in. But first and foremost, you got to come out here. You cannot just fly in and fly out. You need to be based here and really understand things, and then take it from there. I'll stop there. Thanks.
All right. So you've got to fly in. You've got to feel the pulse of Asia. I couldn't agree more, of course. I want to come to you, Paul. We were chatting earlier, and you mentioned that you believe that Asia is a beacon for free trade liberalization. Do you still feel that way?
It's a great question. I think that when we think about the regions of the world and the reasons for why Asia has been so successful, validated by the FDI flow just into Singapore alone, in terms of why it attracts more FDI rather than any other region, I mean, I think there's a number of elements. I mean, one has been the embrace by a number of economies across the region who are members of APEC, and APEC has been a real driver of getting, what I would call officials and private sector together across Asia to embrace the benefits and understandings of free trade, and providing the technical workshops to facilitate that common understanding related to the benefits for investment and trade. And I think that sort of that ongoing sort of APEC family of gatherings at the leaders level, at the business level, is really what drives that sort of comfort for global multinationals, institutional investors to want to come to Asia beyond what I would call the fundamentals that any business traditionally, and I say traditionally, and we'll talk about how we're sort of in a changing world for FDI lands, but tradition over the last couple of decades has been based on what I would call the fundamentals of an investor, which is based on, cost of labor, what's the degree of rule of law, quality of infrastructure, the education, and governance, and ease of doing business as what I would call those traditional drivers for a multinational, for an MNC to look at investment. But as I said, and we can talk about this later, I think there are new drivers being added on in terms of an additional FDI lens going forward. So I think that free trade liberalization embrace, driven in part by APEC, combined with positive engagement across what I would call the traditional pillars of what constitutes FDI, traditional FDI attraction, is what continues to make Asia very attractive.
Well, I want to pick up on the theme of change that you just mentioned. Historically, Pablo, Canada, Mexico, China have been the United States' largest trading partner. Mexico recently has overtaken and jumped into first position. Would you say this is because Mexico and Latin America are benefiting from U.S.-China trade tensions, or are there other factors at play?
Yeah, sure. Well, first of all, thank you for inviting me to be here this week. Thank you, the Milken Institute. It's a pleasure to be here. Yes, reality is the world's a different place today. We have an environment in which, global tensions are unique, especially commercial tensions and geopolitical tensions in between China and the United States have drastically changed the landscape. And Mexico has really benefited from that indirectly without taking part in the conflict. So yes, Mexico now, after 2 decades, has become the U.S. largest trading partner. And that has a lot of implications. A lot of implications for trade in between Mexico, the United States, and Asia. And, we'll talk more about that. But the truth of the matter is we're exporting close to $500 billion. So somewhere in the neighborhood of $480 billion a year to the United States. And I think the country is just positioned to continue to see that number growing, especially as foreign direct investment has really fallen down in China. And so I think not only we'll see U.S. and Canadian-based companies try to migrate their manufacturing into North America, and within North America, they're going to see Mexico as a very good destination to set up shops. But we're also going to see an increase in trade from the rest of the countries in Asia.
Yeah, Paul, I want to ask you if you see that bearing out. We talk a lot about car manufacturing moving from China to Mexico, but what gets left out sometimes is the impact of deglobalization and U.S.-China trade tensions and the implications for Canada. We were talking and you were sharing how there is a whole ecosystem of EV battery makers taking root in Canada. Can you tell us more?
Sure. So I referenced in my earlier remarks about what is the traditional lens for FDI, right? And I think now MNCs are now, there's an additional layer of factors beyond what I would call the traditional fundamentals over the last couple of decades on where they invest and for why. And those that new layer is what I would call a combination, at least from the Canadian experience over the last couple of years, where we see a huge growth in FDI, is based on the congruence or the additive of three factors. Geopolitical considerations, as Pablo had referenced, supply chain resiliency based on what people have perceived is the lessons learned from COVID, and climate change transformation that is driving change, at least within Canada, the United States, and Western Europe in terms of understanding the importance of and driving change within their industries to embrace the new way forward. So those are sort of three way forward. So what does it mean in the Canadian context for why we are now punching above our weight for FDI flow? Well, in the case of the industrial transformation of the auto sector in Canada and the United States, what we are seeing is the understanding that if you want to get supply chain resiliency and the development of electronic vehicles, you need access to those critical minerals for which Canada has an abundance. Then you need access to a technical skill set in terms of processing of the batteries, and then onwards to the manufacturing plants that are now being charged by green energy in order to move forward into the consumer market to leverage what is the over 500 million consumer base. So this is where we've seen Stellantis, Volkswagen, Honda all move in, and whereby Bloomberg NEF has now said Canada has overtaken China for sort of the number one locale for EV battery ecosystems. You would not naturally think, based on the traditional lens of FDI flow into the auto sector, that Canada would now be number one in that space. But that's just a real example of what is the filters at play that is for FDI investment in countries, whereby this new congruence of supply chain resiliency, geopolitical considerations, and climate change transformation is really playing out in the FDI world.
On that note of supply chain diversification, there have been lots of reports of companies moving their supply chains out of China to South Asia, even the Indian subcontinent. Jackie, do you see this as a reaction to the pandemic, or are you expecting this trend to continue?
Yeah, no, it's not only a reaction to the pandemic. I think, the phrase is a lot of people have this whole China plus one strategy, right? So you're seeing a lot of people interested in Vietnam, India, and I think, from a diversification point of view, you look at what recently happened in Bangladesh, right? A lot of the big department stores in the U.S. were relying on sourcing from Bangladesh. I don't think anybody expected that what would happen would happen, but it clearly disrupted supplies, and you force people to start thinking about, should you have multiple sources? So I think it makes sense to have multiple sources. So you'll see more and more of this, and I think I'll talk a little bit about this later on, but I think the other country that is also coming up for different supply chain sources is Indonesia. So we'll see that happening as well.
Okay, we'll pick up on that in just a while. I want to turn to U.S. elections, which happen in 50 days. Absentee voting already happening in some locales. Paul, let me come to you. To what extent do you think a Trump or Harris victory will impact foreign direct investment from Canada or for us here in Asia?
Far be it for a Canadian to talk about the dynamics of the U.S. election. I think that's probably best for those who are American in this room. That being said, of any country in the world that's watching closely, it's probably U.S. neighbors, and that's Mexico and Canada, because we share a border and long-standing people and historical links. So we're watching it closely, and of course, both Mexico and Canada have something vis-a-vis with the United States that most other countries don't, which is a very robust free trade agreement that I think will underpin sort of continued FDI flow among the region. I think it's very clear that the economic agendas of both the candidates is still sort of not detailed enough to really comment. But I think we have to really think about what is really underpinning whatever their stances are in terms of what's clear from within American society. And what we see are two things within American society over the last couple of years. One is the desire to see the creation and increase in high-paying blue-collar jobs, and to some degree the reindustrialization, particularly in the Midwest, of jobs that American society felt that they had, but had been hollowed out through globalized free trade liberalization, rightly or wrongly. And I think the other trend within American society, particularly in Washington, is essentially a concern about what is China's rise and its more assertive and aggressive foreign policy stature. And those are, in one sense, the two elements that at least I personally see is what you can see, in fact, in the political platforms of both candidates. And the only difference is essentially the tools or the means to address both. But the underlying two realities within American society, I think, will influence whoever wins in order to move forward. And so, again, that's where I see supply chain resiliency, geopolitical considerations, and the imperative of climate change, which is nothing to do with politics, continue to influence heavily FDI flow.
Tariffs said to be the centerpiece of Trump's campaign. He's looking to impose 60% tariffs on imports from China, I think 10 to 20% for everywhere else. So the Trump administration seemed to be more conservative, protectionist than the Harris campaign. We were talking, Pablo, and you said to me, you think that Mexico will thrive regardless of who wins. Why is that?
I do, yes. I think that, first of all, I agree with everything that Paul just mentioned. And I would reinforce that and would tell you that it doesn't really matter whether Donald Trump wins the election or Kamala Harris wins the election. I think the one thing that the two candidates have in common is that they want to continue to protect the U.S. supply chain. And none of them is going to favor trade with China. So having said that, I think what we see in the horizon is another at least 8 years of a continuation of these trends. And what we will see is more opportunity for the rest of the Asian countries. And obviously Canada and Mexico to continue to trade more with the United States as the United States continues to protect its supply chain. They don't want to see that broken anymore. And also, I think trade with Asia in general will continue to benefit. I know in the case of Mexico, we are seeing firms like Samsung or Foxconn or and beyond the big tech firms, traditional manufacturing firms like Toyota, like Nissan, continue to be very heavily invested in North America and in Mexico. And we'll continue to see that.
Markets currently associate Trump with a strong U.S. dollar and Harris with a weaker greenback. The dollar is said to be coming under pressure as the Fed decides on interest rates movement and to cut rates. We'll have the first indication, of course, tomorrow. Will a weaker dollar, Jackie, lead to less overseas investment by U.S. companies?
Overseas investment by U.S. companies. I think, Michelle, I'm not so worried about the exchange rate flows. What I'm actually more concerned about, and we're all hoping for a positive result later tonight, I guess, is interest rate cuts. I think that's really affecting a lot of investment. I'm an infrastructure banker. The high interest rates environment is clearly affecting a lot of people's capital investment decisions here in Asia. So I'm really, really hoping more. I think everyone can hedge their dollar exposures or foreign currency exposures, but interest rates, when interest rates are this high, it becomes much more challenging. So my focus is to encourage more investment here in Asia, hopefully in a slightly lower interest rate environment than we have today.
All right, let's turn to one of the biggest themes impacting financial markets, and that is AI. Not a panel here, I think, at Milken will not mention AI. In this region, we're seeing semiconductor companies set up shop in Malaysia, Penang particularly. At the same time, the AI revolution requires a lot of energy, as we know, to power the data centers and servers. So, Paul, how do you see the AI revolution impacting FDI?
So I believe that AI is sort of, in terms of its impact, is complicated. And in one sense, AI is a reality that countries around the world will have to embrace. And what it will mean is that they will need to, as part of it creates sort of a huge drive for an increase in significant amounts of energy. These data centers, the consumption of running AI systems, and you combine that with the increasing needs of economies that are trying to go from developing country status to developed country as the base. Then the electrification through EVs, the data center demands from AI. I mean, I think there is a huge energy increase that comes from the additional layer of AI. That all has to be done in a climate change friendly way. And so I think what it means is these economies that now will embracing AI will now need to up their game in terms of renewable energy in sources that are the traditional solar and solar and what I would call wind. But quite frankly, I just don't believe and I think it's Canada's view that there is no pathway for any country to get to net zero 2050 without embracing some degree of nuclear component. I think that's just the reality of it. And AI, it just provides an added pressure on it. There is also another element besides energy lands on the FDI on AI, and that is the reality that for economies who have benefited from FDI primarily based on being a low-cost labor jurisdiction, with AI and the elimination of the need for human contribution to repetitive tasks, it puts added pressure on developing countries in terms of their agenda to meet developed economy status by the mid-2040s to up their game in the investments in education system. And so I think you will see countries in terms of their fiscal challenges, but understanding the need to invest to rapidly train their workforce that was sort of menial in nature, just to kind of do the factory labor that Jackie mentioned in the garment factories, knowing that may be eliminated, or coders for just basic coding, or the call centers. And AI will essentially rapidly eliminate that if they want to maintain some degree of, to achieve that developed country status, they have to massively engage their population in terms of an AI understanding and a sophistication to benefit from the revolution that will come in countries' industrial sectors going forward.
Do you see this as a hot sector then, FDI going into, say, the digital economy development, as we see, for example, the digitization of trade becoming important? Open question for anybody.
Well, I think the one factor, I think what you've talked about is in a trend that's nascent and is going to get life increasingly, is one of the lessons of many from COVID, which is the amount of paper it takes by an exporter to get product out from one country to another. So if you just step back and you look at what it takes for a manufacturer to get a product out, you start with your bill of lading. It may go into a truck, and the truck has its and the trucking firm has its own cargo bill. it goes into a railway, and the railway has its own, or the port. If it's an agricultural product, it needs a government sanitary certificate going forward. There's a letters of credit. That is still paper. There is insurance coverage. That is paper. And so increasingly what we have found as people were not able to come to their offices and working at home, that there was a risk of supply of goods and services on trade, because how do you get the paper issued when people aren't at the offices? And so there is now an increasing realization that we've got to digitalize and have an interoperability among the public sector who issues these documents and the various private sector parties, whether it's in the banks or the transportation field, in order to have interoperability of these documents so that we can continue to move forward in trade, depending upon what transpires in the next unknown. I think the great news is that it has the benefit of significant elimination of administrative expenses going forward, and the base and for enhancing supply chain visibility and transparency of your goods from when it leaves the dock to your end customer. So going forward, so there are some benefits going forward of the reality of that lessons learned from COVID.
Before I move on to climate and energy, Pablo, did you have a thought on AI and how it could impact FDI?
Yes, absolutely. I think the trend is only going to get stronger. AI, as we all know, is revolutionizing industries, and the impact that it has on across the board is just going to be more and more significant as time moves on. So having said that, I think there are some implications for FDI that are directly linked to AI. And you have to think about a variety of things. I know, talking again about supply chain, what you will see is that technology for AI will become a critical source of enabling the things that we do on a day-to-day basis. So if you look at what countries are starting to do is just continue securing their supply chain to make sure that the products and the sourcing of the materials that they need to enable AI is secure. So for example, in the case of the United States wants to make sure that that specific supply chain, again, doesn't get disrupted. And that's why the U.S. government has announced a partnership, for instance, with Mexico to promote manufacturing of AI components in North America, especially processors. So a good example of why, and so that's why you see all of these investments, FDI, again, flowing into Mexico today, into the technology industry. Foxconn, which I mentioned before, is a very good example. Over the last 4 years, Foxconn alone has invested over $600 million in 2 state-of-the-art facilities to manufacture processors that are going into servers for AI, for Amazon, for NVIDIA, and the like of the big tech. So I think we'll continue to see a lot of that in the next years for sure.
I want to turn to the energy transition and climate change right now. I'm going to come to you, Jackie. Over half of the world's carbon emissions come from Asia, and a whopping 90% from so-called young coal plants, which are in this region. The ADB positioning itself as APEC's climate bank, and it's committed $100 billion for climate financing. What's the money going to?
Thanks, Michelle. So this is a topic I'm obviously very passionate about, and you rightfully, took the right statistics. And I think, people don't recognize how serious this problem is, right? I'll just give you one example. When you go to Indonesia, which, Paul, you're based there, the island of Java, which is the main island, which is where Jakarta is, actually has an oversupply of power today. So everybody's saying, and again, we talked about data centers and AI, and I completely agree with you. on the need for more renewable energy. How do you convince a country like Indonesia that you need to take on more renewable energy to meet your net zero targets when they have an oversupply? They have an abundance of coal. So you need to first, and this is where the ADB is really pioneering, is you need to first focus on what we call a managed phase out of coal-fired power plants here in this region, right? So you have to find a way to reduce the asset life of these coal-fired power plants. You cannot tell Asian countries, shut off the lights and kill all your coal-fired power plants. It's not possible. But at least find a way to first reduce the asset lives of these young coal-fired power plants. I mean, the average life of these plants are about 15 years. They got another 20 to 30 years to go. So first of all, we need to work with governments. We need to work with private sector players to reduce their asset lives. Only then can you start talking about investing more in renewable energy, because there's the problem. And so where is this going? We've committed 100 billion. Again, when everybody thinks about climate finance, it's not only about investing in renewable energy. We're not doing enough on energy efficiency. We're not doing enough on electric mobility. We're not doing enough and when you talk about climate finance, there are two elements of climate finance. There's climate mitigation, which may be easier to do, but with all the floods and all the natural disasters that are going on, climate adaptation is also equally important. So India and China are our two largest borrowers traditionally, but more and more now we're working a lot with the Philippines, we're working in Bangladesh, and it's not only the volumes, Michelle, that counts, it's also the impact, right? So the ADB covers 14 Pacific Island countries. So obviously the need there in terms of dollar amounts may be small, but the impact for some of these countries, which might be sinking if we're not careful, is huge. So our attention is right across Asia, all the way from Tonga to Georgia. It's all on developing Asia. Developed Asia does not need our money. And for us, we truly believe, with the statistics that you mentioned, the battle for climate change is going to be won or lost here in Asia. So I think it's incumbent upon all of us to really focus on this topic. People talk about things like, we're going to do this for our grandchildren. I don't feel that that's the case. We need to do it for ourselves, not for our grandchildren. It'll probably be too late if we start thinking about our grandchildren. I'm going to stop there because I could go on this topic forever.
I can tell. I can hear the passion. Paul?
Just an additional comment, but perhaps a little bit positive on this topic, is beyond the moral and social imperative to do it, for which governments in the region and various vested stakeholders are struggling to move forward. There is an external pressure, though, that I think we're seeing, that is actually going to give life to movement in terms of adjustment of the coal-fired power plants, and that is the increasing desire by Western economies to start greening their supply chains as a means, and dictating to outside, to the rest of the world, that if you want access in terms of your products into the Western economies, then it's not just based on tariffs anymore. It's based on it's based on environmental and labor considerations. So just to use a Canadian example, one of our largest Canadian private sector investments in the region is off the shore of Taiwan. It's a Canadian company building an offshore wind turbine deployment that's massive in order to provide wind into Taiwan. That's essentially one of the drivers by the Taiwanese government, was a realization that if those semiconductor plants that makes Taiwan wants its chips to come into the United States, and particularly to buyers such as Apple is putting pressure on its supplier base for green chips. So the coal-fired power plants that are powering those semiconductor plants don't have continued viability. And we're seeing it across other Western buyers of products in terms of even in the garment industry, the pressure on what are the labor standards, what are the environmental standards of greening those garment industries. So that's going to be a helpful fillip to beyond the financing and the technical capacity that your institution is going to be providing. And it just makes policymakers, it'll make it easier for policymakers to get over that hurdle of the vested interests around the coal-fired power plants across Asia.
Historically, critics of free trade have argued that Mexico's environmental standards have been more lax compared, say, to the United States, and they say that's given Mexico an unfair trade advantage. Pablo, to what extent is this an issue, and is climate financing shaping FDI in your country?
Not to the extent that it should, in my opinion. But I think what we will continue to see is countries being part of international agreements, such as the Paris Agreement, will continue to see pressure from not only the international community, but at the end of the day, from the consumers. So just like Paul is mentioning, at the end of the day, if you're a consumer anywhere in the world, you're becoming more conscious about the environment. And you're starting to demand that the products that you buy are environmentally friendly. And so I think that's a market pressure that goes beyond what the regulators are doing. So I think that if you combine what the regulators and what the international community is doing to regulate itself, combined with what the consumer and the demands of corporations are doing internationally, that has a direct impact on domestic policy. So if Apple is demanding that you source products that are eco-friendly, that puts pressure on the global supply chain. And I think that applies to Mexico as well. And that's one of the reasons why we're seeing things change in Latin America in general towards greener emissions.
I want to change gears and bring it back home to Singapore and incorporate some Milken research as well. Singapore was recently rated the most attractive country in the region for foreign investments. This according to the Milken Institute's Global Opportunity Index. So Singapore at 14th in global rankings, one notch above Hong Kong, 2 places above Japan, and 4 spots above Australia. It is the 3rd biggest recipient of FDI worldwide, Singapore. I had to double check that statistic myself, after US and China. So Paul, I want to come to you. Is Singapore a useful model? Is it a replicable model?
So I think there's some elements of the new way forward on FDI that Singapore has, and that is the benchmark, notwithstanding the fact that it's island state and it's a population market size of 5 to 6 million people. And those are what I would call the way forward on FDI for all government policymakers, regardless of jurisdiction, is what I call 3 categories. One, what I would call the traditional fundamentals to attract FDI of the past. I think in Southeast Asia in particular, there is still work to do, right? And in terms of educated workforce, ASEAN harmonization as a marketplace, because it really isn't a 670 million marketplace that's a single market. There is still work to do. There is a more transparency and predictability of rule of law that is harmonized, and continued work on ease of business. So that's that fundamental layer that Singapore has always had. That has to happen. Then number 2 is what I would call the second category for the new way forward on FDI, is you have to look forward. And so we talked about AI. So as I said, low-cost labor is not necessarily a feature anymore. So what are governments doing in terms of getting their populace together? Canada was the first country in the world to issue a national AI strategy. Singapore is on its 2nd version, right? And putting billions in. So again, looking forward. And the other one is obviously greening, and and embracing and the investments in technology and climate change for the reality of Western markets demanding that, and of course the social and moral imperative to do so. And then I think the third is interconnectedness. And that is interconnectedness in two ways. One is moving to numerous free trade agreements of a high quality standard that Singapore is a leader on globally. And then number two, interconnectedness, which I define as also inclusiveness within society and making sure that all parts of society are benefiting and not just maybe the elites of the society. And so I think Singapore is doing all the right things in these three categories. And I think that's what all other governments should indeed embrace and watch the Singapore way.
All right, I'm going to take, because I promised, I'm going to take questions from you in the room. So does anybody have a question? You can put your hand up, just stand up and shout your question out. Any questions? Yes, stand up and...
Hi, thanks gentlemen so much. It's a really engaging panel, a lot of interesting content on climate, on AI. Jackie, I got a question for you. When you're talking about the young coal-fired power plants and needing to essentially address the asset life, tell me if I'm wrong. What I'm hearing is essentially buying out the people who bought the coal factories to make it, profitable for them to shut down. Is that correct, or is there another aspect to that?
Yeah, no, thanks for your question. I guess you're not buying out. I mean, if you owned a coal-fired power plant and I told you you need to shut it down 10 years earlier, you're going to say to me, Jackie, I've got my investors, I've run my numbers, I've done everything. Why should I shut it down 10 years earlier? At your, what we call NPV neutral, i.e. your return is exactly the same if I asked you to shut down 10 years earlier. So I'm not going to make you richer, but I can't make you any poorer to convince you to shut down something 10 years. And I have to also hope that you and your shareholders realize that if you do not do anything, the way the world is going, you may end up with what's called a stranded asset. So I have to work with people who believe that it makes sense if I have the same returns 10 years earlier, that it makes sense to shut down these coal-fired power plants earlier on. So I don't know, does that answer your question?
I totally get what you're saying. I just want to follow up real quick and then I'll
Sure.
hand it over. When they built these power plants 15 years ago, because that's not that long, we already knew about the climate crisis. So they were already investing in coal at a time when we were facing this problem. So is there not perhaps maybe a moral argument that money should be going for other forms of mitigation and adaptation?
They should, and they are, but you can't do. And you see, this is the issue here in Asia. You cannot do one without the other. You have to do both, right? We all want to invest more and more in renewable energy, as I explained, but you cannot without doing this. And to your point about should they have known 15 years ago, again, I think the dynamics in Asia are different, right? If you look at the coal-fired power plants in Europe and the US, they're already, 40 years old. They're going to be decommissioned. But the problem is these ones are way too young. And at least 15 years ago, 10 years ago, it was all about economic growth here in Asia. And what was not only the cheapest source of fuel was coal, but also remember, and that's again another thing that people forget when we talk about Asia. I mean, we call it this energy trilemma, right? Everyone's focused on doing the right thing, sustainability, energy transition. But what about affordability and security, right? And so I think those who invested 15 years ago, it was all about building plants that were affordable. And unfortunately, coal was the most affordable fuel source. Hopefully we can now persuade them otherwise with solar panel prices coming down and that there are alternative solutions. I mean, you mentioned nuclear. Is there a role for, and that's the other thing, renewable is intermittent. So we have to find replacements that are baseload supplies of power. So it's a challenging issue, but at least hopefully we're heading in the right direction.
A great note to end on, that investment's not just about capital flows, but the pursuit of a more equitable world. Thank you to my panelists. Pablo Cabalasi is president of Amex Cap, the Mexican Association of Private Capital. Jackie Sertani, regional director of the ADB, and Paul Torpil, Indo-Pacific Trade Representative from Canada. A round of applause, please, for our wonderful panelists.